Hi, I'm Max Kaiser. This is the Kaiser Report. We got them just where we want them. Stacey?
Well, Max, this first headline is the theme of the show, okay? It's Allahu Akbar, Allahu Gold Bar. We're all terrorists now. Believe in a return to the gold standard? You are now officially an extremist, according to the FBI.
Yeah, we got them just where we want them. You know, they're trying to keep the gold price cheap because it makes a mockery of the U.S. dollar. So the FBI is saying if you buy gold, you're a terrorist, thus increasing the panic buying of gold around the world. This is just like Federal Reserve Chairman Ben Bernanke trying to talk his way into some kind of economic nirvana, which has failed miserably. Now the FBI believes that they're hotsy-totsy economists. They're going to talk gold down. Yeah, right, that's going to happen, you frickin' idiots. You're only going to cause more panic buying. I went out and bought more.
In fact, it's actually worse than what this headline from Zero Hedge suggests. They're saying that if you believe in a return to the gold standard, you're an extremist, according to the FBI. In fact, it's actually if you think that the U.S. government went bankrupt by going off the gold standard, you're an extremist. Now look at the full context, however, of the FBI warning. FBI warns of threat from anti-government extremists. Now, if it weren't for the gold warning, you would think these were bankers. Anti-government extremists opposed to taxes and regulations pose a growing threat to local law enforcement officers in the United States, the FBI warned on Monday. These extremists, sometimes known as sovereign citizens, believe they can live outside any type of government authority, the FBI said. The extremists may refuse to pay taxes, defy government environmental regulations, and believe the United States went bankrupt by going off a gold standard.
Well, I like the way they referred to it in the past. And they say the FBI is saying that the United States went bankrupt when it got off the gold standard. Yes, when the U.S. got off the gold standard and they filled the economy worth of now 15+ trillion in debt, that's true. They went bankrupt. So the FBI is saying, if in fact you pick up a history book, if you look at a fact on the internet, if you speak with a neighbor about the facts of the reality of the bankruptcy of the United States, oh, we're gonna come after you, and we're gonna cause massive global panic buying of gold because that's how smart we are.
The FBI mentions that these so-called sovereign citizens are committing many crimes, mostly white-collar crimes of fraud, they say. Again, if it were not for that one single sentence of gold standard issue, you would not know the difference between who they are talking about and bankers. How many taxes did Goldman Sachs or JP Morgan pay last year, Max?
About 1% of income. General Electric, not zero.
Okay, so these extremists refuse to pay taxes. How many regulations does Jamie Dimon say he wants to abide by?
None. He goes to other countries like Canada and gets them to go around their own regulations.
Exactly. However, we're going to turn to some more extremism, Max. How your dollar got to be worth just 3.8 cents. This is an extremist chart from Credit Suisse Bank on the extremist website businessinsider.com. And you can see from the chart on the red, the rising prices. Notice how prices really started to take off, Max, after 1971. The blue is the purchasing power in $1,900. Now notice the two huge catastrophic drops of about 50% in a 10-year period when your purchasing power dropped by 50%. The first time, 1910 to 1920. What happened in that 10-year period? The Federal Reserve was created. Then the second one, 1970 to 1980. Do you remember what happened in that 10-year period, Max?
Enlighten me.
We went off the gold standard. So this is an extremist chart. You might be arrested for looking at it.
That's correct. As you point out, from 1971, when the U.S. went off the gold standard, to the present, the dollar lost like 97% of its value. It's about, believe it or not, it's about to lose another 60 or 70% of its value. Ben Bernanke himself, in his recent testimony, said by inflation targeting, he wants the U.S. to lose 33% of its purchasing power over the next 5 to 6 years. Okay, so by all the FBI's definition, they should be frog marching Ben Bernanke out of the Federal Reserve into the prison system. But I don't get it. Where's the double standard there? Oh, that's right. You're panic people buying into panic buying of gold. Smart move.
Now, again, we're going to turn to an extremist series of maps here. And you'll find that, in fact, the reason why the FBI is warning, I believe, against people saying the U.S. went bankrupt by going off the gold standard, if you look at these series of charts from 1970 to 1980 to 1990 to 2000, what you notice is that, in fact, in 1970, the U.S. was already bankrupt, and then they went off the gold standard. If you look at the rest of the globe and all of these maps from Zero Hedge, in fact, the rest of the world was pretty solvent while the U.S. was going bankrupt. But what happened once the U.S. and the rest of the world went off the gold standard? The rest of the world became bankrupt.
Yeah, well, because of the toxic derivatives that are floating in all the other banks around the world that are manufactured in the United States because the U.S. is off the gold standard. And as you point out, in the 70s, they were already bankrupt because of the Vietnam War that they couldn't pay for. And I noticed that the FBI hasn't issued a statement saying that unless America gets out of these wars that they can't pay for, it'll continue to be bankrupt. I don't see the CIA or Obama saying that unless America stops these wars around the world that they can't pay for, that the U.S. will continue to be in bankruptcy. So is it those words not in the dictionary down there at the Langley or wherever you're hanging out watching this show and panic buying gold, as I know you are?
Again, let's return to this last chart there, the last map of the external debt to GDP. When it's a gold standard, if the U.S. was in debt, they had a trade deficit. That meant they had to send their gold to France. They had to send gold to Britain, meaning that Britain had a surplus and they were not in debt and they were not bankrupt. However, as you see from this last chart here in the last decade, every single nation on earth is bankrupt. Therefore, where is the wealth going to come from? We are all bankrupt.
Excellent points. And you know, and the use of the language is really phenomenal, like this use of the word sovereign. And if you wish sovereignty, you're a terrorist. I mean, this is exactly what they're telling the people in Greece. The people in Greece would like economic sovereignty. The people in Greece would like sovereignty. But the Troika, the IMF, the ECB, and whatever other fakakta organization they got down there is saying that, no, sovereignty is for chumps. You want to be a debt slave. You want to be a chump like us. Here, take more debt. And the Greek people are like, well, gosh, I'm not sure. Is that really what we should be doing while we're eating our souvlaki?
Speaking of Greece, we have Greece in the headlines, Max. Dramatic drop in budget revenues. Now, this might be an extremist language here too, but Finance Ministry in Greece is reporting that January data shows a revenue decline of 7% against their budget projections of a rise of 8.9%.
It's in free fall like Argentina for the same reason. You had a kleptocrats come in and steal all your money. Now the economy is in free fall and it's going the way of the all flesh into the terminal decline. And the Greek experiment, only 5,000 years old, is finished.
And remember, it's the people who have been for the last few years resisting the IMF and the EU and the Troika. They're the extremists. Worse still, value-added tax receipts posted an 18.7% decrease last month from January. This follows a last year. Here's a headline, Max. Greece increases reduced VAT and austerity measures. So to get the last round of bailouts, they had to increase their VAT from 13% to 23% on food. It's resulted in a catastrophic decline in revenues.
Yeah, the price of moussaka is skyrocketing. Ouzo? Nobody can afford it anymore. They're making bathtub gin. Using old grapes and olives.
Well, the Finance Ministry officials attribute the slump in VAT receipt figures to the major cash flow problems that enterprises are facing. Some of the latter are choosing not to pay for their VAT in order to plug other holes caused by liquidity problems.
Well, the whole thing is a farce because the IMF came in and they said, if you don't take these austerity measures, we're going to have to cut you off from your credit supply and your economy will go into free fall and you'll lose your bond rating. So then the rating agencies came in like Moody's and S&P and said, well, because of the austerity measures that you put into place in your country, we're going to have to cut your credit rating anyway. So the bond market collapsed, the income has collapsed, the GDP has collapsed, the entire sovereignty has collapsed. The use of the word sovereignty is not considered a terrorist act. And the people are out in front of the Parliament building in Syngenta Square.
Well, Max, now plugging these holes is the only thing we have since going off the gold standard. The story about the VAT receipts declining because enterprises are plugging their holes, they're taking any cash they get and filling in their debt holes, their black holes of debt. It sounds like what happened with MF Global, of course.
No, not MF Global. The monster from the deep. We've come from MF Global. Jamie Dimon is a zombie that must be fed from customer money. Segregated accounts, we don't respect them. We just steal the money and give it to Jamie.
Well, here's a headline on MF Global. Tumultuous last days in MF Global collapse. An investigation in the U.S. by the trustee for MF Global has revealed the brokerage misused customer funds 5 days before the New York-based parent company filed for bankruptcy in October. The 3-month investigation into the U.S. parent also shed light on the growing chaos inside MF Global during its final days as customers were pulling funds from the broker that specialized in derivatives and high-risk trading products. Now, who actually went bust? Whose money was stolen? It wasn't people engaged in high-risk trading products. This is the same sort of propaganda that we see in the first headlines. You could act like a banker. You can not pay taxes. You cannot believe in regulation. You could dump all sorts of toxins into the environment. But as long as you don't believe in the gold standard, you're fine. Here, the same thing. These were small farmers, mostly, who had all of their money stolen. But to the population at large, they're saying they were engaged in high-risk trading.
Right, the small farmers who use the futures markets to reduce risk of farming. This is what futures markets are created. But in the last days of MF Global, the speculators like Corzine and Jamie Dimon, who are taking the opposite trade from the farmers and leveraging that by 1,000 times and then putting that risk out into the public domain to be absorbed by the derivatives market that ends up being foisted on countries like Greece anyway. They're the ones who are being victimized. Oh, we're a victim. My bonus. I couldn't pay my yacht payment last month. I'm hurting so badly. Jamie Dimon cries and he cries. And there should be a permanent boot mark upside this guy's keister. But no, he just gets to sashay down the street like everything's fine, even though he's the freaking terrorist. Okay, Stacey Herbert, thanks so much for being on the Kaiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay right there. Hi, I'm Max Kaiser. Welcome back to the Kaiser Report. Time now to go to New York and speak with Francine McKenna, who operates the blog ReadTheAuditors.com, a specialized news site about the business of the big 4 audit firms, including PricewaterhouseCoopers, where she previously worked. She also writes for Forbes. Francine, welcome to the Kaiser Report.
Thanks for having me.
Let's talk about MF Global. The MF Global client funds have been vaporized and then found and then vaporized. It goes over many times here. Will the money ever be found? Where is this money?
Well, I don't believe any of the latest reports because they keep talking about legitimate transactions. This money is gone. It's not coming back because I think that it disappeared as a result of an illegitimate transaction. You don't have legitimate transactions, real things like sales of assets to Goldman Sachs or borrowing against a line of credit at JP Morgan. That doesn't result in money actually missing. And they've actually admitted that it's been missing ever since the 31st when they went bankrupt.
Just before the 31st, there was a huge outflow of cash, right, to said creditors who apparently had some inside information this was about to blow up. Is that true?
Well, there was a report out today that perhaps they started moving customer assets even earlier than they thought, the 26th. And that's consistent with some theories that I've put out, which says that once they thought they were in the clear and they had handed the CME group the last report that said everything was in order, they started moving assets around. And I think my theory is that they pledged them for a line of credit to try to get through the weekend. They planned on selling the company. and then maybe putting those assets back. Unfortunately, their plans were foiled by the forced bankruptcy, and that's why I think those assets are gone completely, because whoever had them sold them.
Let's talk about this word vaporized for a second. According to the Wall Street Journal, they're saying these funds vaporized. Is this ever been happened as such in your experience?
Money doesn't just disappear. What's unusual here for something that's sort of a potentially criminal or fraudulent situation is that we don't have somebody who's skipped town and has ended up in the Cayman Islands or the money in a Swiss bank account. Everybody's still on board, everybody's still here. So it's the money itself, it's the assets themselves that got used in an illegitimate manner, and they're no longer on the balance sheet of MF Global. They're going to have to sue some people, and they may have to put some handcuffs on people to get them to return the value of what they took at that point.
Okay, now to follow up on that point, the MF Global trustees have said this week that MF Global didn't always record cash movements. Isn't that outright fraud?
Absolutely. And I think it's disingenuous to say that in the last days things were a little chaotic and crazy. Of course they didn't record things. But the difference is did they not record transactions that were legitimate and they're just a little behind on their bookkeeping? Or did they actually do something that was under the table? I believe that you can't have $1.2 billion gone unless they did something that was under the table. Again, with the hope that they could sell the company and be able to put all the money back in time before anyone knew it was missing.
Now, Francine, when I was working on Wall Street, the compliance officer, the guy who is supposed to oversee the day-to-day margin calls and balancing of the books, he was a guy we bribed routinely to look the other way. Is this similar to this? Is this a similar situation, basically, where the office, the compliance guy, was slipped a few bucks, and presto changeo, suddenly the funds are vaporized? Is that kind of what we're talking about?
Well, I think if you watched him testify, Mr. Stockman, last week before Congress, you would see that you probably didn't have to pay him off. He looked a little oblivious to the whole thing, and he admitted more than once that he was either out to lunch, out on vacation, or just completely out of it, not invited to meetings, not included in the discussions at a senior level. I mean, there's a theory or a word for this. It's called plausible deniability. The less people they tell, the less people they have to worry about that might slip up and say the wrong thing and blow the whole deal. I think that the machinations were contained in a very limited group of people, perhaps the 2 or 3 people at the top, and all these other folks that are being dragged through the mud in the operations or the back office, some of the names that were dropped at previous hearings. Those people were just doing their job. I really don't believe that they were part of the criminal or the illegitimate activity that took place. I think that they were just there and did what they were told to do.
Okay, now who specifically are the auditors involved in the MF Global case, and are there any conflicts of interest there?
The auditors are PricewaterhouseCoopers, and they have a very long history with MF Global because they were the auditors, and they still are the auditors of EDF Mann, of Mann Financial, which is the company that spun off MF Global into a public company in 2007. PwC also was the ones that created the original internal control procedures and Sarbanes-Oxley procedures way back when the company was called REFCO. PwC has an enormous number of conflicts with this particular issue, and they're not being called to account. They haven't yet been called to testify, even though the rating agencies have. They know where the company stood from a segregated assets perspective at the annual report period in March, at the time when the bonds were issued in August. They had to file special reports with the SEC, they had to file special reports with the CFTC, and those reports are no longer on file at the SEC or the CFTC. So we as a public or the investors or the customers can't look and see what did PwC say or do about any kind of weakness in controls at any point in time in the immediate future or immediate past.
Now, one name that keeps popping up all the time is J.P. Morgan. What was their role in all of this?
Well, interestingly enough, PwC also audits J.P. Morgan. And you have PwC also auditing the law firm that the trustee Giddens works for. So you have a lot of vested interest in everybody keeping the noise down. And in fact, JP Morgan was the primary banker to MF Global, and JP Morgan was also the trustee on the bond issue that MF Global had back in August. My strong opinion is that no one is willing to say yet that the money was actually taken or stolen, because that means that all of these folks have to act, in particular the trustee, and they're going to be suing firms like JP Morgan and PwC like they've done in similar circumstances, such as Refco or any other bankruptcy, New Century, some of the other bankruptcies that had very strong pointers to these third parties like the banks, the investment banks, the law firms, and the accounting firms who allowed criminal activity to take place and either look the other way or potentially help them along the way.
Now, reports suggest that JP Morgan in the bankruptcy was junior to the customers in terms of claims, but somehow they manipulated the regulations to become senior to the customers and, in effect, stole money from customers, as some describe what events that took place. Is that a fair characterization?
There's a lot of concern about how the bankruptcy was actually structured, that it was a forced bankruptcy by SIPA, Securities Investor Protection Corp, that put the wrong people as a priority, and that if it would have been done as Chapter 7, then they would have had the customers put first. My personal belief is that this is really sort of peripheral to the fundamental issue. If there wasn't money missing, it really wouldn't matter how the bankruptcy was structured, because you wouldn't have to be as concerned about customers having to eat the loss. That's not occurred too often. However, it has happened before, and some of the comments that have been made in certain testimony that, oh, customer assets have never been taken, this has never happened before, we never had to deal with it, is not necessarily true. It's just that these things are settled quietly, and they're settled in ways such that we don't see who were the real culprits. But there's plenty of examples of people taking customer assets. The Sentinel case, which is one that's been mentioned quite a bit, and there was one about 10 years back called Griffith Trading, and nobody talks about that because everything is under seal.
All right, Francis McKenna, you mentioned Revco a couple of times, and of course, going back to 2007, the Revco situation blew up. It was a huge red flag at the time in terms of a coming global financial credit and market collapse, but nobody did anything at the time. But could you give us a little insight into how Revco situation relates to the MF Global?
Well, Refco is sort of the genesis of MF Global. Refco is the futures firm that became MF Global after it was sort of washed through Man Financial. But Refco, as you alluded to, was a big scandal, a big fraud, a bankruptcy. People went to jail. People were sued, and that litigation is still going on. Bankers, lawyers, and accounting firms were sued. But they fight it because as soon as you have executives that have actually done something wrong and that have been convicted of it, everybody else just claims that they were duped. And that's the most common defense, and that's the defense that probably the accounting firms, lawyers, or anybody else that was either standing on the sidelines or helping create documents or support this effort at MF Global will probably claim they didn't know, or they were fooled, or they had something put in front of them that they didn't really understand. Refco also had something very specific occur that helped them along. It had a bankruptcy examiner. The trustee hired a specific attorney to go through and do the investigation. Here at MF Global, we have a do-it-yourself investigation that's turned into a cluster schmuck between the DOJ, the CFTC, to some extent the CME, although they've been sort of put on the sidelines. And you don't have anybody really with a completely independent or objective view gathering all the facts, taking interviews and depositions. You have a lot of competing interests, and therefore the possibility that somebody is going to keep something under the rug, and we'll never really know the true story, given everybody's willingness to defend each other and keep each other out of trouble.
All right, finally, John Corzine of MF Global, he claimed in front of Congress that he had no idea where this money went. Do you believe him? that statement, Francine McKenna?
Absolutely not, and I think that he was probably instrumental to do the kind of deal they did to try to keep the company alive, because I think that that was the goal of Corzine, Abelow, and his consigliere Ferber. To keep the company alive, they had to have a go-to person or a go-to firm, somebody to help them through this process. And those kinds of connections come through long-term relationships. I suspect that when we find out who benefited from this situation, we're going to find somebody very close to Corzine or to Goldman Sachs.
Okay, we'll have to have you back on. We're out of time now. Thanks so much for being on the Kaiser Report, Francine McKenna.
Thank you.
All right, and that's going to do it for this edition of the Kaiser Report with me, Max Kaiser, and Stacey Herbert. I want to thank my guest, Francine McKenna. If you want to send me an email, please do so at kaiserreport@rttv.ru. Until next time, Max Kaiser saying bye, y'all.